Hello traders, tis I TheRumpledOne coming to you on Wednesday, November the 12th, the year's 2025. Let's talk trading. Facing fear. These videos are for educational purposes only. Your results may differ from mine. As always, let's have our risk management in place, and then we don't have to worry about fear because we know if we have our risk management in place, we're not going to lose more than we're willing to lose on a trade or during a trading session. So, facing fear, you know, um, some of you may remember that, I'm big in the preparedness, a prepper, survivalist. It doesn't matter how you label it, but, I'm prepared for just about anything because when it comes to emergencies, you really only have two choices. You either stay put or you leave. And so you can kind of look at trading the same way. I mean, you can either enter the trade or not. I mean, at any particular time, that's up to you. And the thing about fear is you're projecting something into the future, but you don't know that it's going to happen. So you have to prepare. So the first thing is you need to figure out what fear or fears you have. I mean, are you afraid if you entered a trade, it's going to go against you and you might not get a chance to take profit? Are you afraid if you pull the trigger, that trade is going to blow your account? Now, thing is, as I always mention about these stop losses, if you have your stop loss in place, when you make your trade, you put your stop loss in, then, barring some unforeseen fat finger black swan event, um, the worst thing that's going to happen is it's going to hit your stop and stop you out. So if you say, okay, I'm going to lose $10 on this trade, or $100, or $1,000, or 5,000, or 10, doesn't matter. That's the worst thing that's going to happen. And so, okay, now we know that's the worst thing that's going to happen. Now, can we prevent that from happening? Well, in trading, you really can't prevent it. But if you see um, your trade going against you, and maybe you actually get a signal that tells you to go in the opposite direction, well, then you can make sure that worst case scenario doesn't happen. You can cut that trade off. It doesn't have to hit your stop before you exit it. And that's just, something that you got to remember. You're not in a horse race, you're trading. In a horse race, you're rooting, you're hoping, he's going to come down the back stretch and come around that last turn and run to the finish and win. Well, trading doesn't matter how hard you root, just kind of like in horse racing, it's not up to you. So you you have to make sure that this worst thing that can happen, you prevent it. And so in this case, the worst thing is that you blow your account. You prevent that by putting your stop loss in a place where you can live the trade again. So that's kind of simple. And then the final thing is, if the worst thing that happens, can you fix it or can you recover? Well, once again, with that stop loss in place, blowing your account shouldn't happen. And if it did, you probably need to talk to your broker because something definitely went wrong. So if you're afraid to enter a trade because you're afraid it might not work out, then trading might not be for you because every trade you enter might not work out. That's just part of it. You just have to realize that this trade might not work out, even though I've looked at my trading plan, everything, this entry meets every last one of my trading criteria. I've taken a look. There's nothing that says I really shouldn't take this trade, so I take it. And I put my stop loss in, and hey, if it doesn't work out, it doesn't work out. So that's it. I mean, the worst thing that could happen is that it hits your stop, but you live to trade another day. So if any of you out there are facing fear, and let me know if there's something else I need to mention, because that's pretty much it. I mean, you should be able to enter the trade and not have any fear at all. Just say, hey, you know what? This trade might not work out. If it doesn't work out, I either cut it short or it hits my stop, and then I wait for the next signal. It's pretty much that simple. Yesterday, I believe it was, or was it the day before? No, the day before, there was that open gap. And then yesterday, I can't remember, but there was something on the chart that I thought, oh yeah, was it? No, that's from today. There was something yesterday. Oh yeah, this big green bar here. I said, hey, you know what? If I remember correctly, we're looking at M30. And I said, this big green bar, price needs to come back to that open. And there we go. And so today, you got this big red bar. It's like, hey, price needs to go back to that open. And guess what? We're almost in the launch pad here. So, it may hit it, it may not. I don't know. We'll have to cross that daily open to do so. So when you look at the chart and you pick these things out, it's possible it might not work out. Now I'm trying to remember, was there a gap also yesterday? Maybe I should start taking notes. But these things are kind of simple, if you ask me. Now you can see here price came down and hit the ATR zone here. Now you got to remember, these are dynamic ATR zones. So this zone got pulled down because of this low, but you see the high was here. So this zone has not moved, but price dropped into it and then reversed. I know I haven't talked much about ATR zones, average true range, but that's just another one of those trades that I've discussed before. I haven't talked about them in a long time, but it's just one more thing in the arsenal to when you're looking at the chart, just to say, hey, you know what? This kind of confirms that we might have a turnaround here. Okay, let's just take a look here at the year. Wow, we got real close to that midpoint there. 627 pips above the open, 651 off the high, 1039 off the low at the moment. Got really close though. And we had that inside bar 7 days ago, and look, price broke out here. So there was pips to be made on that inside bar. Range only 71 pips. The Swiss yen 195 pips, leading the pack for the day. And we got the pound. I'm sorry, we got the dollar yen and the euro yen both sitting at 100. Pound dollar, though, it's anemic, 71 pips. And you can see here, daily open, weekly open really close. We had a couple of trades here for shorts. We're getting back into the short zone on a green candle here. We'll see what happens. This should be interesting when it hits that daily and weekly open. They're only 1 pip away from each other. And we got enough range here in that rat zone. So now the green rats just got done feasting. Might be time for the red rats. Pivot trading plan. Bambino Flex said go long near the pivot. Or actually it said to go long. Pivot trading plan said bias by the pivot was short. And you can see here that short would have paid off. And wow, the S1 is right near the support 1 is right near yesterday's low, and resistance 1 is right near yesterday's high. I don't think I've ever seen that, but that's kind of interesting. Okay, we've taken out the daily pivot, taken out the weekly, but we haven't taken out the monthly yet. In and out of the lower wick zone, you can see here we started off inside, jumped to the upside once, upside twice, couldn't maintain it. Then we exited the downside 3 times when we're back in that wick zone. 75% of the time, price closes out over the last 60 days. So, when you really think about it in trading, if you're setting things up, there's nothing to fear. I mean, the worst thing that should happen is your stop loss gets hit. With the correct position size, it should be within your loss tolerance or risk parameters. So you should be able to enter those trades with confidence, knowing that, hey, I'm entering at the right time, got the right position size, I'm following my trading plan, and since this isn't baking, there's a possibility that my stop loss gets hit. That's the worst thing. Best case scenario, price goes my way, and I can exit with a nice profit. And it's pretty much that simple. And you just realize that once you put the trade on, it's almost like it doesn't matter what's on the chart. I mean, that's just representing price. And it's either going your way or it's not. Now, a lot of people say, stick with your plan. And you don't really look at the P&L because you want to make sure you're executing the process properly. Because if you execute the process properly, the P&L is going to be in your favor over the long haul. Because it's, one trade should not make or break you. A day's worth of trading should not make or break you. Ditto for a week, ditto for a month. You need to think maybe quarterly. Monthly's not too bad, but quarterly might be better. And you look, year to year. Are you ahead of the game? Are you making money? And the thing is, are you doing this as a hobby? Or are you doing this to put food on the table and pay your bills? Big difference, different motivation. So we might talk about that in another video, your trading motivation. Because, fellow traders, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.